Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 25th day of July 2014, and this is the daily report for gold and silver. Off of a low today of 1289.80, the high 1309.50. We currently do have precious metals trading higher, up about $12 to $13, 1306, 1307, as you can see on the screen. Quite a dramatic turnaround from the most recent activity, especially yesterday. Silver also with a nice showing today, up over 1.5% actually, currently trading at 2071. The high today 2086, the low 2030. More on silver towards the end of the show. Absolute dramatic recovery in the precious metals markets. Even though silver in terms of percentage gain leads the way, silver on the left, gold on the right, you can see in terms of a candlestick pattern in gold, it's a engulfing bullish, meaning it opens at the close of the prior day. That's always going to happen because it's a 24-hour market. But as you can see, current trading has put it past the highs of yesterday and the entire body, engulfing the entire body. Whereas when we look at the silver market, dramatic showing there also, but this is a piercing line. It looks like it will close at or above, and in this case above the midpoint of the prior daily candle. As I said, more on silver towards the end of the show, but I did want to point that out. So the real question we need to ask ourselves, and we'll really determine this as trading opens up again during the beginning of the week, is have we seen the end of this kind of corrective action that we have been part and parcel to really for the better part of July? When we consider, and these are subcounts and a subcount of the subcount, but I'm looking at this as a wave 1 and this as a wave 2. On a wave 2, we'll typically see that break down into some sort of an A, a B, and then a C. We talked about the fact that B's typically, a B wave will typically go anywhere between 50 and 75% that of A. Certainly did that. I thought it would go higher. I thought we would see it towards the upper end of this area. That was not to be, but the market did find resistance at 1318 and came down. Now, the low that it hit in yesterday's trading was below the low of that wave A. However, it would still be constituted, if in fact that is the low and the market moves higher from this point, as what is simply called a flat. And a flat is where your A low and C low, these lows here, are equal or about equal, and we can certainly say that. If in fact it could not hold this or cannot hold this if we resume to lower trading at the beginning of next week, really the area that I'm looking for is 1280. 1280 would be, of course, a 61% retracement of this rally here, retraces 61% and then begins to move up. This would constitute, of course, our next wave. In terms of a subcount, wave 1, wave 2, this would be wave 3. However, we can see right now that if it does find support and begins to trade higher, and I have been an adamant believer during this entire slide that the fundamentals really weren't, I believe, reflected in the price of the precious metals, specifically gold, because as we saw geopolitical uncertainty escalate, certainly not de-escalate at least, we saw the price of gold trade lower. And that was a quagmire, to say the least. It was something that left many traders confused. In terms of a straight technical model, though, we really need to see what we're going to get here. Are we going to get that confirming candle on Monday? Now, realize in an engulfing bullish, what you want to see is a confirming candle, meaning you get a market day in which you have a higher high, a higher low, and the body moves above the body of the prior trading session. It would look something like this. So we'll have to see. This is certainly a very quick one-day turnaround in the market, but as I said before, the factors that are driving the market, I don't believe were adequately reflected in the price. We saw safe haven premium erode when I didn't believe there was real cause for that erosion. Nonetheless, I'm not the one that runs the market. Traders are, and they bet this market was going lower, and in fact, that's what we saw. So there are absolutely some key elements to what we're seeing in the marketplace today. First, the fact that it recovered. Second, the recovery is dramatic. I cannot believe that all we're witnessing is short covering, but some return to safe haven buying. The key is this. If we are to look at our current model, and to do that, I really want to go ahead and compress this chart. And when we do that, if we're going to look at the fact that we hit this high, this is 1391. This is our $200 rally, begins the end of 2013, continues into 2014. From there, a dramatic fall. That fall to about 1260. It comes up, hits this top. This is 1330. This is 1345. We've had a series of higher tops. We've also had a series of higher lows in the market. When we look at it in that way, we can absolutely ascertain that what we might in fact see, if we are to look at our current Elliott wave, is an impulse, a corrective, and whether or not this market goes to this 61% retracement, which is 1280, or in fact, if we stick with this flat, the flat being what, roughly at around 1293, that being the low. The point is that we will get an impulse wave that moves up from here once we conclude, if we already haven't concluded this ABC. In other words, if we terminated it yesterday on these lows here, and this is the beginning of that impulse, this impulse wave, in order for this model to stand any kind of weight whatsoever, is going to have to take out the recent high of 1345. And one particular model that we can always utilize, and it's a very, very quick and easy way to take a look at the market, is simply to look at the magnitude of this particular market, this particular wave here, and postulate, to speculate what we would see if we had some sort of an equal move. Now, this move was roughly $100, and all I'm going to do is add a scalable line which covers the entire range of this move. It's a little bit short, but it will work nonetheless. We'll take it to the beginning or the low that we had here. Even if the low comes in at 1280, you'll just subtract 1300, but that would mean that this impulse wave should in fact have the strength to carry us at least back to roughly this particular mark right here, which is just below 1400. So we could see over the next, say, 2 to 3 weeks, a pretty significant move to the upside. The question that remains is, will we see any more downside pressure in the market? Will it threaten and actually come to this 61% retracement, or have we seen the lows at 1290? That's the question traders need to postulate over the weekend. I know I will be. Now, one of the charts that we've been using recently is the Andrews Pitchfork. We kind of brought it out again because we did notice something that happened back about a month ago, and that's the fact that we actually exceeded and finally broke above this cascading downward channel. It continues to cascade, which means as it cascades lower, this line, the threshold, becomes lower. But as this market moves up, it finds a top, and as I said, for us to remain in any kind of a bullish scenario, what we need to see on a technical basis is this to come down, but not break into this outer prong, this zero prong, and then from there, it should begin to bounce higher. If it does that, it has definitely broken out of this channel, which has been so prevalent within the marketplace over the last couple of years. And then lastly, I do want to visit silver for just a little bit. Tremendous move to the upside in silver, up over 1.5%. Gold up about 1% on the day. What we really can eloquently see in the market, this is that same rally that propelled gold $100 higher during that period through June into the beginning of July. Hits its top roughly, I believe it was 2160, right in that area. Market comes down, and it comes down to a 50% retracement in the same way we saw gold come to a 50% retracement, and now is popping off of that with this piercing line. Again, we have a piercing line in terms of our candlestick patterns in silver and engulfing bullish in gold, both tremendously strong upside key reversal patterns if they're followed with some sort of confirmation confirming candle. Same thing goes for silver. Confirming candle in silver would be a green candle on Monday, higher high, higher low, and it would look something like this. Of course, I'm not putting any tails in. I'm just trying to show the body of the market. That's what we would see, and that would, of course, trigger an entry point or buy signal into the market. Stops would be placed below this most recent low, 50% in both gold and silver. That's what we'll look at come Monday morning next week and see where we go from there. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.